Welcome back to Bloomberg News. I'm Mark Crumpton. Thanks so much for joining us. June UK unemployment rose the least in a year to 7.6%. This after climbing to its highest level in 12 years in May. Joining us now from London with reaction, Royal Bank of Scotland economist Ross Walker. Ross, welcome to Bloomberg News.
Hello.
Ross, give us your reaction to that UK unemployment number. Were you surprised?
Well, the numbers were surprising because we had a much smaller than expected rise in the jobless claims measure, but we had a record, an all-time rise going back to the early 70s, increase in the labour force survey measure, which is a broader, more comprehensive measure of unemployment. So the data are rather contradictory. Both numbers can't be right. I suspect reality is probably closer to the bigger rise in the labour force survey.
So Ross, do you think the quarterly numbers, they paint a more realistic, or I should say a more accurate picture?
I think so. They seem to be more in line with what we would have expected to see given the sharp falls in GDP. UK economic output has been contracting since the second quarter of last year. We had a horrendous fall in the first quarter of this year. So on that basis, we would be expecting to see round about now and in the second half of this year large rises in unemployment. That's coming through on the survey, the broader measure, but not on the jobless claims figures.
Now, do you think the Bank of England might be getting closer right now to calling an end to the bond purchase program? And what does that mean for quantitative easing going forward?
Well, that was certainly our interpretation and the market's view last Thursday after the policy decision and a very bland policy statement. But since then, the Deputy Governor, Charlie Bean, has been very vocal, and the clear indications seem to be that the bank is uncomfortable with the markets pricing in an end to quantitative easing at this stage. So they've been doing their best to stress that this is an ongoing process. They're going to review this each month, and the key decision will probably come next month in August when we get the updated forecasts and the Bank of England's latest inflation report.
Well, Mr. Bean also said that the Finance Minister, Alistair Darling, is going to allow the Bank of England to surpass the £150 billion ceiling for asset purchases, quote, by a reasonable amount. What is a reasonable amount?
Well, that's the question. Charlie Bean was saying that he thought that if they requested further authorisation, the Treasury would grant it. That's almost certainly true. There's no reason why the Finance Ministry would have any interest in preventing that. And in fact, one of the big concerns is that the Finance Ministry is all too keen for this monetisation to continue because they have record amounts of debt to sell into the market. So it's much easier if the Bank of England is buying up a large chunk of it. I suspect that we have probably at least another 25 billion of purchases to go. That would take us up to the £150 billion ceiling that has currently been authorised. We may go a little bit beyond that, but right. I think we are still approaching the end game now in terms of quantitative easing.
Ross, on July 24th, second quarter GDP numbers come out. What are you expecting?
I think we'll see another fall. Our forecast is for a quarter-on-quarter drop of 0.3%, so around 1.2% annualized. So still declining, but a much, much less severe contraction than we saw in the first quarter. We probably see growth resuming in the third quarter based on the better survey data. But I think the problem the UK economy has is that growth is going to be very sluggish. Right. And next year we have probably very large tax rises coming. We're already seeing mortgage rates start to edge back up. So there's a monetary tightening as well, just beginning to take place. And these will present quite formidable headwinds for the UK consumer, along with the weak labour market situation.
Right. Ross Walker, an economist at the Royal Bank of Scotland, joining us from London. Ross, thanks.